When you think of waste management, or WM as they're going by these days, you probably just picture a giant green garbage truck rolling down your street at like 6 a.m., right? Well, today on The Explainer, we're unpacking one of the wildest corporate evolutions out there. We're talking about a company that went from a single, humble horse-drawn wagon to a literal $92 billion sustainability and tech giant. It's an absolutely massive story about automation, efficiency, and literally turning trash into treasure. Let's dive in. Here is our roadmap for today. 1. A century of trash. 2. The billion-dollar balance sheet. 3. Investing in a greener future. 4. Cashing in. 5. The competitive landscape. And finally, number 6, beyond the garbage truck. Okay, let's jump right into section 1, a century of trash, general information and history. So before we can even wrap our heads around all the multi-billion-dollar tech investments, we really have to look at where this all started because it is wild. Picture this. It's 1894, and a Dutch immigrant named Harm Huizenga is hauling garbage in Chicago with just one horse cart. He was charging $1.25. Fast forward to 1968, and his grandson, Wayne Huizenga, teams up with Dean Buntrack to formally found the company and basically consolidate a super fragmented industry. They had their IPO in 1971, and man, they just grew relentlessly. Now, to put that original $1.25 cart into perspective, in 2024, WM dropped $7.2 billion to acquire the medical waste giant Stericycle. And by mid-2026, they're sitting comfortably at a market cap of over $92 billion. The sheer scale of that growth is just staggering. Moving right along to section 2, the billion-dollar balance sheet, capital structure and evaluations. To truly grasp just how massive this transformation is, we need to look under the hood. Take a look at this number. As of May 2026, Waste Management has roughly 403.1 million shares out there. When you multiply that by a share price hovering around the $230 mark, boom, you get that insane $92 billion market cap. It really puts into perspective their massive footprint and liquidity on Wall Street today. And here is the absolute bedrock backing all those shares up. If we look at this side by side of their balance sheet from year-end 2025 to the end of Q1 2026, it tells a story of unbelievable stability. Total assets are holding incredibly steady at over $45.7 billion. Meanwhile, total liabilities are sitting around $35.6 billion. That leaves us with a super healthy stockholders' equity that just crossed the $10 billion mark. You know, looking at how stable that asset to liability ratio is quarter after quarter, this isn't some volatile tech startup hoping to eventually turn a profit. It's a literal financial fortress. Now, this right here is an absolutely crucial milestone. Recently, WM managed to drop their operating expenses below 60% of their total revenue for the very first time in the company's history. Now, you might be wondering, so what? Why does that jargon matter? Well, dropping below that 60% barrier is a huge deal. It proves that all those heavy investments they've made into things like automation, real-time routing diagnostics, and AI, they're actually working. They're actively de-risking the business from wage and fuel inflation and permanently lowering the cost of doing business. It's a real game changer. Which brings us to section 3, investing in a greener future, active and planned investments. So, how exactly did they pull off those historic cost savings? Well, WM isn't just out there buying more garbage trucks. They are pouring capital into the future. Check this out. In 2025 alone, they finished building 7 renewable natural gas, or RNG plants. These places literally capture methane gas straight from landfills and convert it into pipeline-quality natural gas. Plus, in early 2026, they launched these AI automated recycling centers in Detroit and Ontario. They're using advanced optical sorting to get incredibly pure recycled materials, which added a whopping 300,000 tons of processing capacity. Add in the integration of that $7.2 billion Stericycle acquisition, and it's pretty clear they are building entirely new, highly profitable revenue streams. And they are definitely not slowing down. They're actually right in the middle of a $3 billion sustainability growth plan. Step 1 for 2026, build 6 more of those super lucrative RNG plants. Step 2 is rolling out 4 brand new high-tech recycling projects this year. And step 3, looking ahead to 2028, is expanding what they call sustainability as a service. Basically, they're stepping in as the go-to ESG consultants for massive corporate clients. They've mapped out exactly how they plan to hit $1 billion in sustainability earnings by 2027. Energy and tech are, without a doubt, their future. Let's move to section 4, cashing in, dividend growth and 2026 potential. Okay, so we've talked about all these massive billion-dollar projects, but you're probably asking, what does this mean for the retail investor? Well, WM operates with a highly disciplined payout ratio, sitting right at about 49.5%. This is basically the Goldilocks zone for a mature company. It means they're handing almost half of their earnings right back to shareholders to reward their loyalty. But, and this is key, they're keeping that other 50.5% as retained earnings. That cash is exactly what fuels those massive sustainability and infrastructure projects we were just talking about. And man, that discipline pays off. Just look at this, an incredible 23-year streak of consecutive dividend growth. For 2026, they announced a planned 14.5% jump, aiming for a super robust $3.78 per share annual dividend. Actually, in just the first quarter of 2026 alone, they handed out $385 million in cash dividends. If you're building a dividend growth portfolio, they are an absolute cornerstone. Next up, Section 5, the competitive landscape. U.S. and global rivals. Now, no company operates in a vacuum, right? To really measure WM's success, we have to use their closest competitors as a yardstick. In the U.S., the market is basically this giant duopoly shared with their biggest rival, Republic Services. Republic goes toe-to-toe with them in market scale and operational footprint. But we also have to talk about Waste Connections. What's super fascinating here is that Waste Connections actually slightly edges WM out on profitability. They boast a crazy 33% EBITDA margin compared to WM's target of 30.8% to 31%. So yeah, it's a fiercely competitive space where every single ounce of operational efficiency counts. But when we zoom out to the global stage, the picture changes entirely. WM is strictly and very intentionally focused on North America. Meanwhile, their biggest global competitors, Veolia and Suez, have this massive international reach. Veolia, for instance, actually just posted record-high results in 2025 across its global operations. But WM isn't trying to spread itself thin across the entire globe. Their whole strategy is about totally dominating the dense, incredibly profitable North American market. Which brings us to our final section, number 6, Beyond the Garbage Truck. General comments and strategic summary. We've covered the wild history, the rock-solid financials, and the rivals. So let's pull all of this into one big, cohesive takeaway. Wall Street analysts currently like to call waste management a defensive compounder. So what's that actually mean for us? It means their unmatched disposal network. I'm talking the physical landfills, the transfer stations, the massive fleets. It creates an almost insurmountable competitive mode. Think about it. A brand new startup literally cannot just replicate this level of infrastructure overnight. They've totally transformed from a simple, low-margin waste hauler into this highly profitable sustainability and materials manager. And you can see exactly how much attention this pivot is getting from the big players. Major financial data platforms are obsessively tracking WM's earnings calls and their tech transformation. Institutions are watching closely because WM's structural cost reset and that massive push into renewable energy are literally redefining the standards for the entire industry. The big money on Wall Street is validating this tech pivot every single quarter. Which leaves us with this final, kind of provocative thought. When you step back and look at the AI-powered sorting facilities, the massive natural gas production, the corporate climate consulting, and the automated logistics, is waste management actually still a trash company? Or have they quietly evolved into one of the most vital technology and energy firms in North America? It really makes you rethink how everyday municipal services can operate at a multi-billion-dollar scale. Thanks for hanging out with me for this explainer, and I'll catch you on the next one.